Good morning, everyone. Welcome to the Stock Market Morning Prep video for Tuesday, January 13th. Another wild day in the markets yesterday, that's for sure. Markets are getting a little bit exciting. Thank God we see a little bit of volatility the first week or so of the new trading year of 2015. So I'm really excited about that. We've got a lot of things happening. Crude oil really getting decimated every day, down 2 to 4%. Pretty amazing stuff. Where do we see any downside targets? Well, I'm going to show that to you now in this video. We have a quick two areas where I believe the markets will at least pause and get some sort of a dead cat bounce. As far as how far or how hard that bounce will be, no one knows. As we all know, no one really knows where the bottom of crude is. When you have the pundits on CNBC and Bloomberg talking about this and that, there's nobody knows. Nobody could even fathom a sell-off like this. So just let's keep that in perspective. I'm looking for some downside targets in the charts. I have them. Are they going to hold? Who knows? We were looking at $45 to $48 to hold. Then we were looking at 56 and then 60, and that never happened. That literally sliced right through. Now, are we oversold? We're extremely oversold. But as you can see in the chart here, we've been extremely oversold pretty much all of June, July, all of the summer, and now going into the fall and winter months. So there's like no end in sight, and this is a weekly chart, so this is not even a daily chart. And it looks like a daily chart, but this is pretty brutal in the selling. There's going to be a lot of complications ahead of this crude oil if oil doesn't stabilize and gets back above 60-ish, I would say. There's a lot of countries that just cannot run its country on oil that's at $40, $35 a barrel. So you're going to see a lot of complications in the next few weeks, and also the next few weeks and quarter. You're probably going to see a lot more jobs being lost when you have a lot of these rigs that are closing at an alarming rate every week. And like I mentioned before, there are about 90 to 125 personnel on each rig. And that's just in the United States, let alone in Canada. All right, so let's just keep everything in perspective, but we'll see what happens here. We did get another down day. We're going to go over a couple of indicators I told you on Monday. We're looking for some washouts. Did not happen, so we do have some further move to the downside. Now, I am still looking for a decent pullback. It doesn't mean that this is the one that this started. To me, it doesn't look like there's any panic and any kind of selling here. So I would suspect that we get a little bit of a pullback, maybe another day or two, and then we try to bounce again, and then we fail, and we chop around to this upper end of the range. And then once we get a downside break with volume, you could pretty much solidify we might have a local top in place, okay? So let's get right into the charts. I just want to show you my objective here is $40 to $35. That's going to be the next target in crude oil. And again, I hope it actually can hold right in this area here and then get a bounce. I mean, we have an 8-week weekly average, moving average, coming in at $56. That's over $11 right now, and that's amazing how far away that the band has been stretched. So watch for some sort of a move. And remember, guys, if you're short crude and you're holding a short in crude overnight, I would be very, very careful, because at any given moment, we could have somebody talking up crude oil or just a dead cat bounce, and you're going to get a violent bounce to the upside. So just keep that in mind, please, if you are looking to short crude oil. I would not even think about shorting crude oil down here. Even if you get down to $40 or $35, the risk reward is just not there. Okay, so we're looking for a target, downside target of 40 to 35. There's the band. Here we have a little bit of congestion right up in this area. We do have the bottom of this volume profile here, if you will. So if we get down here, as you can see, this is what happens once you break back above these areas of support. It just sucks price all the way down, and that's where it is, and that's where it looks like it's headed here, guys. $40 to $35. 35 being really an overshoot. I really don't see oil being in the 30s. If it did, maybe it would touch it and then really rally. Okay, so just keep an eye on that. Let's take a look at the NYUD, advanced decline with volume. Remember, we're looking for that washout like we did in October and again here in late December. We have not got that yet. So to me, I think that we can push lower, and then we could look for a bounce. I don't see a bounce or a sustainable bounce here at the moment. Okay, here's the McClellan oscillator, also negative 13, basically neutral, telling me that there's further to run in to the downside before we even get oversold. All right, guys, so let's take a look at the Let's look at the charts. Got a couple of bear flags here that broke and that actually triggered a short yesterday, and that's the spiders. You can see here the SPY, which is the S&P 500 ETF. Okay, so the next target's going to be right here, 201.42, and if we break that, I hate to say it, but we're going to really attract that 200-day moving average. And if we lose this today, we'll probably shoot right down to here, and then we would again reevaluate it. Okay, you'll see a lot of the indices are the same. The Russell here a little bit weaker than the other indices that we follow, but again, the next downside target, 50-day held, so we're going to look at that 50, and then of course that 200 would coincide nicely with this horizontal range that we've been in November and a good part of December here. Okay, now let's take a look at the diamonds, and then we'll go follow up with the Qs. And again, diamonds, same thing, the Dow Jones ETF, as you can see here. The next spot is the 50, and then of course this lower trend line here, which would be that gap up from November 1st. And then we'll look to reevaluate. But again, as you can see, very sloppy trading pretty much of December and January now. So let's keep it easy. Let's keep everything in check. Make sure your stops are in, and just manage your trades accordingly to your trading plan. Here's the Qs. As I mentioned on Monday, lower lows, and lower highs. And what we have here, we broke the 50-day, and tech is actually very weak, and that's not a good sign. We need tech and banks to participate, and they have not been doing so. What's been really rallying are the interest-sensitive, the REITs, even some of the home builders have been rallying pretty nicely, and of course utilities. So that's not good. And you get gold. Gold starting to rally too as well, which looks like that fear trade may be on. So that's something that we need to keep an eye on here. Let's monitor what we have. Please put your stops, keep your stops in place, and adhere to your trading plan. That's been working for you. Stick with the plan, okay? Hope it helps, guys. We'll see you tomorrow. Have a great day.